studying your last two. I swim med when they turned in. The staring down to mute. And can learn the pole that sunk he died.
One of the most valuable habits a tax planner can develop is replacing opinions with evidence. Too often, advisors encounter a planning situation and immediately begin asking questions like, should the client take salary? Would dividends be better? Would a hybrid approach create a better result? These questions are natural, but there is a problem. If the answers are based only on assumptions, they remain guesses. And professional planning should never rely on guesswork. This slide introduces a simple but powerful mindset. Don't wonder if a strategy works. Test it. At the center of the slide, we see an advisor standing at a crossroads. One path leads to a salary strategy, another leads to a dividend strategy, and a third leads to a hybrid approach. The advisor is unsure which path is best. This situation is very common in tax planning. The challenge is that all three options may appear reasonable at first glance. Without testing them, it is impossible to know which one produces the best outcome for a particular client. On the left side of the slide, we see the traditional thinking approach. The advisor is surrounded by uncertainty. Thoughts such as, I think salary is best. Maybe dividends are better. Not sure which is right. These statements are based on opinions rather than evidence, and that creates several problems. Assumptions replace facts. Opinions replace analysis. Guesswork replaces planning. As uncertainty increases, confidence decreases, and conflicting advice often follows. The result is that neither the advisor nor the client can be completely certain that the chosen strategy is truly the best one. Now look at the right side of the slide. This is the modern planning mindset. Instead of debating possibilities, the advisor uses software to test them. The process is straightforward. Start with an idea. Build the scenario. Run the calculations. Review the results. And then make the decision. Notice how uncertainty begins to disappear. The software transforms assumptions into measurable outcomes. At the center of the slide is a laboratory-style illustration with an important message. Planning is an experiment. Just like a scientist tests a hypothesis before drawing conclusions, a tax planner should test a strategy before making a recommendation. Run the scenario. Observe the results. Learn from the outcome. Then improve the plan. The visual at the bottom reinforces the key shift in thinking. Instead of asking, what do I think will happen? Ask, what happens when I run it? That single change can dramatically improve the quality of planning decisions. Because the goal is not to prove that your opinion is correct. The goal is to discover what the numbers actually reveal. The best advisors are not the ones with the strongest opinions. They are the ones who test ideas, compare outcomes, and let evidence guide their recommendations. The key lesson from this slide is simple. If you're thinking about a strategy, test it. Better information leads to better understanding. Better understanding leads to better decisions. And better decisions lead to better outcomes for your clients. Now that we've adopted the mindset of testing instead of guessing, the next step is learning how to perform that testing in practice. This is where Profile becomes one of the most valuable tools in the planning process. The purpose of Profile is simple. It allows you to build multiple scenarios, compare them side by side, and see the consequences before making a decision. At the top of the slide, we see the client profile loaded into the software. The client's information has already been gathered. Income details, corporate information, family circumstances, assets, goals, retirement objectives. Everything that influences the planning process is now available inside the software. Once the profile is complete, the real planning begins. In the middle of the slide, we see 3 scenarios built within Profile. Scenario A uses a salary strategy. Scenario B uses a dividend strategy. Scenario C uses a hybrid strategy. Each scenario produces a different outcome. And that is exactly why scenario modeling is so powerful. The software is no longer asking what might happen. It is showing what actually happens under each strategy. For every scenario, we can evaluate important planning metrics: total tax, CPP contributions, RRSP room created, after-tax cash flow, and the impact on retirement planning. Instead of looking at one factor in isolation, we can see the complete picture. This is critical because compensation planning is rarely about finding the lowest tax result. A strategy that reduces tax today may reduce CPP benefits later. A strategy that creates RRSP room may require higher CPP contributions. A strategy that maximizes current cash flow may affect long-term retirement outcomes. Every choice involves trade-offs. Profile allows us to see those trade-offs clearly. The comparison dashboard at the bottom of the slide brings all the scenarios together. Notice how every strategy can be evaluated side by side. The differences become immediately visible. One scenario may win on tax savings. Another may produce better retirement results. A third may offer the best balance overall. The important point is that the advisor no longer has to rely on assumptions. The software provides objective comparisons based on actual calculations. The callout boxes on the right highlight some of the major benefits: instant comparison, visual results, easy adjustments, and better planning. If the advisor wants to test a different salary amount, a different dividend amount, or a different planning assumption, the software can generate updated results almost immediately. This allows advisors to experiment, refine, and optimize strategies efficiently. At the bottom of the slide is perhaps the most important message of all. Profile lets you see the consequences before making the decision. That statement captures the true purpose of planning software. Good planning is not about predicting the future with certainty. It is about understanding the likely outcomes of different choices before committing to one of them. When advisors can see the consequences in advance, they make better recommendations. When clients can see the consequences in advance, they make better decisions. And when both advisor and client understand the trade-offs clearly, confidence increases dramatically. The key lesson from this slide is simple. Build multiple scenarios. Compare them side by side. Study the differences. And let the evidence guide the decision-making process. Because great planning happens when you can see the consequences before they become reality. This final slide brings together the entire planning philosophy of this section. When planning compensation strategies, recommendations should come from results, not opinions. Too often, advisors begin with a preferred strategy and then try to justify it. But professional planning works in the opposite direction. First, we test the options. Then we study the results. And only after that do we make a recommendation. At the top of the slide, we see the complete journey from idea to decision. The process begins with a planning idea. An advisor may be considering a salary strategy, a dividend strategy, or a hybrid approach. At this stage, these are simply possibilities. No conclusions have been reached yet. The next step is profile modeling. This is where the software becomes a powerful planning tool. The advisor enters the assumptions, builds the scenarios, and allows the software to perform the calculations. The software removes much of the uncertainty by converting ideas into measurable outcomes. Once the scenarios have been processed, we arrive at the results dashboard. Now we can see the full picture. We can compare taxes, cash flow, CPP contributions, RRSP rule, retirement impacts, and other important planning factors. Instead of relying on opinions, we now have objective information. But information alone does not create value. This brings us to the fourth stage, advisor interpretation. The advisor reviews the results and identifies the key insights. Perhaps one strategy produces lower taxes. Perhaps another creates higher CPP benefits. Perhaps another generates more RRSP room. Or perhaps one option leads to a stronger retirement outcome. The advisor's role is to explain these differences and help the client understand the trade-offs. This is where numbers become meaningful. The final stage is the client decision. Because the client now understands the consequences of each option, they can make a confident and informed choice. The recommendation is no longer based on assumptions. It is based on evidence. In the middle of the slide, we see an important comparison between planning before modeling and planning after modeling. Before modeling, the conversation is filled with opinions. One person believes salary is best. Another believes dividends are better. Questions lead to debate. Debate creates uncertainty, and uncertainty creates confusion. After modeling, the conversation changes completely. Now we have facts, comparisons, evidence, confidence, and clarity. The discussion becomes more productive because everyone is working from the same information. This shift is one of the most important transformations in professional planning. Instead of arguing about what might happen, we can evaluate what the software shows is likely to happen. At the bottom of the slide is the central message of the entire section. Recommendations should come from results, not opinions. That principle improves analysis. It improves client conversations. It improves decision-making. And ultimately, it improves client outcomes. The target graphic on the right represents evidence-based planning. The goal is not to prove that an advisor's opinion is correct. The goal is to identify the strategy that best aligns with the client's objectives. And the best way to do that is to model the options, compare the outcomes, understand the implications, and then recommend with confidence. The final takeaway from this slide is simple. Model it, compare it, understand it, then recommend with confidence. Because the strongest recommendations are not built on assumptions. They are built on evidence.